Let's start with a simple comparison of Exxonmobil versus BP. As you can see here, Exxonmobil with a market cap of 284 billion is about 3 times the size of BP, 96.5 billion. PE ratio on ExxonMobil right now is 12.53. On BP, it's 34.84. Now let's remember these two numbers. Exxon selling for about $70, BP selling for about $31. Let's see what Value Pro says about their intrinsic values. Exxon, according to valuepro.net, has an intrinsic value of 138.96, and BP has an intrinsic value of 115. Which of the two is a better bargain? Quantitatively speaking, we've got 70 versus 138. That's almost 140. So about 50% bargain on Exxon. And let's see, BP was about 30. So there's a greater bargain here on BP quantitatively because the intrinsic value here is 115, whereas the was in the 30 range. Let's see, let's go back to BP's price. Yes, it was 31.63. So purely on a quantitative basis, one would say that at this point in time, if we believe Value Pro, BP would be the greater bargain. However, let's take a look at their efficiency and margins. We see here that for the month of June, Exxon returned return on equity of about 13.5, and that has dipped down from highs around 27 and back in 2013. And BP actually has a negative return on equity at this point. They're paying out money for the fines, so the market has hammered them down a little bit more. Their return on equity for June 2015 was a minus 5.41, and at the current time they have a negative return on equity. At their high point, they had gotten to about 21, 23. So just purely on a return on equity basis over time, over the last few years, Exxon has returned a better return on shareholder equity in this comparison. Now let's look at their debt structure. The debt to equity ratio was around 0.19 or 19%. And as you can see, they've been adding on some debt. They had a low here of 0.07 or 7.5%. When we go down to BP, on a debt analysis, their current debt structure is 0.53 or 53.8%. And they had a low debt in around, also in 2013 of around 0.35 or 3.5%. So when we do this type of comparison and we look just at the last year or so, we'd have to say that Exxon also does better in this scenario because it's carrying proportionally a smaller amount of debt than BP. So although on a quantitative basis, BP appears to have a wider spread between its intrinsic value and its market price, if we're going purely by efficiency and debt, we'd have to vote for Exxon. So as you can see, it's a comparison model where you have to use different variables and take a look at your assessment of safety. and always have a margin of safety in your purchases. Finally, you also want to look at their annual reports, and this button takes you to the annual reports and filings with the SEC, and here we can click on the documents there and look at their 10K, and the same thing down here. We could do the same thing for BP.